The global financial crisis of 2008 was one of the most significant economic events of the past century. It had far-reaching consequences that affected countries and industries around the world. In this video, we will examine the geography of the global financial crisis, including its causes, its impact on different regions of the world, and the role of global financial institutions. The global financial crisis of 2008 was caused by a combination of factors, including lax regulation of financial markets, a lack of transparency in financial transactions, and excessive risk-taking by financial institutions. The crisis was sparked by the collapse of the U.S. housing market, which had been fueled by the issuance of subprime mortgages to borrowers with poor credit histories. As the housing market began to collapse, financial institutions that had invested heavily in mortgage-backed securities began to experience massive losses, leading to a wave of bankruptcies and bailouts. The impact of the global financial crisis was felt around the world, but it was not evenly distributed. The crisis hit developed countries like the United States, Europe, and Japan the hardest, with many countries experiencing severe recessions and high levels of unemployment. However, the crisis also had a significant impact on emerging markets, such as China, India, and Brazil, which had become increasingly integrated into the global financial system. Many of these countries experienced a sharp decline in exports and a decrease in foreign investment, leading to a slowdown in economic growth. The global financial crisis also had a significant impact on global financial institutions, including banks, investment firms, and insurance companies. Many of these institutions had taken on excessive risk and were highly leveraged, meaning they had borrowed heavily to finance their investments. As the crisis unfolded, many of these institutions experienced massive losses and were forced to seek government bailouts or file for bankruptcy. The collapse of Lehman Brothers, a major investment bank, was a turning point in the crisis, as it led to a wave of panic and forced other financial institutions to rapidly leverage. Global financial institutions played a critical role in the global financial crisis. The International Monetary Fund (IMF), for example, provided emergency loans to countries that were experiencing financial difficulties. The World Bank also played a role in providing assistance to countries that were affected by the crisis. However, these institutions were criticized for their role in promoting policies that had contributed to the crisis, such as deregulation of financial markets and the push for greater financial integration. The aftermath of the global financial crisis led to significant changes in the global financial system. Many countries implemented new regulations to prevent a repeat of the crisis, such as tighter restrictions on bank lending and increased transparency in financial transactions. The crisis also led to a shift in global economic power, with emerging markets like China and India becoming increasingly influential in the global economy. The crisis also sparked a wave of anti-globalization sentiment, as many people around the world became disillusioned with the idea of a globalized economy that was dominated by a few powerful players. In conclusion, the global financial crisis of 2008 was a significant event that had far-reaching consequences for the global economy. The crisis was caused by a combination of factors, including lax regulation of financial markets, a lack of transparency in financial transactions, and excessive risk-taking by financial institutions. The impact of the crisis was felt around the world, with developed countries and emerging markets alike experiencing significant economic downturns. Global financial institutions played a critical role in the crisis, both in terms of its causes and its aftermath. The crisis led to significant changes in the global financial system, including increased regulation and a shift in global economic power. Thank you for watching. We would love to hear your thoughts on this topic. If you enjoyed this video, please remember to give it a thumbs up and subscribe to our channel for more content.